Jamie, Moneylinks, mate, welcome to the Carpool.
Thank you, mate. Thanks for having me.
Mate, you're in the hot seat.
I know.
Finally made it.
Thank you.
Let's talk first home buyers. You're a
Yes.
mortgage broker. Let's say I'm a first home buyer, right?
Yep.
I've got a little bit of deposit going. I've got maybe a relationship with the bank already.
Yep.
Do I go to the bank? Do I go to the mortgage broker? I'm confused. What's the go?
Yeah, sure. Hopefully, from my point of view, you come to a mortgage broker, of course.
Yep.
Obviously, with a mortgage broker, we've got access to many more different lenders and options than you could have at your existing bank. So, for example, a 5% guarantee scheme through Housing Australia isn't offered by every bank. So you might turn up to your bank and that's not an option for them and you walk away disappointed. Where if you come to a broker and say, look, we've got at least half a dozen lenders that will look at you under this 5% scheme, you've got your 5% saved and get you away with that.
As a first home buyer, am I paying you or what? How does that work? Do I have to pay the mortgage broker?
Not at all. We don't charge a fee. We get paid by the bank directly. So
Sweet.
It's not costing you any more using me than it does walking directly into one of the banks or one of the other lenders.
Yeah, gotcha. So I can take a free swing.
Absolutely.
It's not going to cost me anything.
100%.
And you don't just work with one bank. You might work with 20 banks
absolutely.
to find the best deal.
Correct. And that's my job as a broker, is to find the best deal for you. Not everyone's in the same category. You might have a self-employed person that's got one great year of financials. The year before was terrible. So let's look at ANZ for you because we know they've got a great policy for 1 year self-employed.
So pretty much on your software, you'll look at 30, 40 different banks, just plug in the numbers and then it'll auto-populate like these are the best ones, but then plus your broking knowledge on top of that as well.
Yeah, exactly right. Yeah, we've got the tools to be able to do that, but I probably rely more on my experience and knowledge to be able to work out what I feel is best. When I'm having a conversation with clients, throughout that conversation I'm getting a feel already for the lender that I think may be the most suitable, but then obviously do my homework and make sure we're going to get the best interest rates and the best product for the customer.
And how many years have you been doing it for?
21 years.
First stint.
I know. 21 years.
Tell me more about Moneylinks.
So this is Moneylinks. We're just coming up to our 25th anniversary actually this weekend. So 25 years strong with Moneylinks. Brendan Lowbridge, he's the director.
Goes it right, doesn't he?
Goes very well, Brendan. Brendan started, I think, over 10 years ago now.
Yep.
But has built up a really good business. And he's got a really great team behind him.
But you're on the Gold Coast office.
Yeah, I moved up here 2 years ago to the Gold Coast and flying the flag for Moneylinks in the Gold Coast.
Let's say I'm first home buyer, I earn 95 grand, single guy, trying to get my deposits and stuff together.
Yep.
Like, how does it work? What can I actually borrow? What's the broad dollars on, I guess, my kind of borrowing capacity?
If you're a single guy on 95
and
you've got no other liabilities and no living expenses outside the ordinary, you're probably in the range of about 520 to 540,000 that you could borrow as a loan amount, plus your deposit on top of that.
What's the typical kind of deposit that you would need, I guess, a first home buyer? They need to get the 50 grand marker or not that much?
Depending on the purchase price, but with the 5% first home deposit scheme, basically 5% of the purchase price.
Gotcha.
Plus about 3,000 or 4,000 we'd like to take for legal fees as well. So on a 600 purchase price, you'd be looking at having about 34,000.
It's pretty good. It's not like you need to get to the 100 grand marker to then get yourself in the real estate market.
Yeah,
you,
for sure.
You can get in with look, it's still not easy to save up 35 grand, but still, you got to have your finance goals, and if it's important to you and you want to save that amount of money, then naturally you'll just do that.
Definitely, yeah. It's a lot easier to get in with some of the schemes that are available now.
Yeah.
And in that price range, for example, in Queensland, in the capital cities or regional centres, you can buy up to 700,000 and still be eligible for the 5% scheme.
And what does that get me, the 5%? Do I have to pay stamp duty on top of that, or is that exempt?
Yeah, up to 700,000 as well, you can get a full exemption on your stamp duty.
So what's the dollar saving on that, like ballpark?
700,000 purchase. The stamp duty on that
20 grand
saving, just a bit under, but close to that.
Yeah, gotcha.
Saving. So there's some great savings. And from the 1st of May this year, there's no cap on stamp duty exemptions for first home buyers.
What does that mean?
So for a purchase, for example, at 800,000, you can apply to get a full stamp duty exemption.
Yeah, wow. Okay. And is that just Queensland or that's anywhere?
That's Queensland state government rule. But it starts on the 1st of May. 2025,
And so if I want to do that, what's the best way forward? Do I just contact you and then you just do the whole thing?
Absolutely.
Like you do the whole application?
Correct, yeah, we do that. Yeah. And then the conveyancer will look after the stamp duty side of things.
Yep.
But we have that relationship with them to make sure that we communicate and ensure that you exemption applies.
And of course, if they want to buy a property, they can also speak to me.
Of course, absolutely.
And I help them out as well. But for them to actually get this money, they need to show the bank, or they got to show you certain things, right? Like,
correct.
How many credit cards do they have? What's their like student loan? What's their like spending or savings rates? If someone comes to you and they're on 95 grand,
yeah.
What are you actually looking for when they say, hey, this is what I do and here's my earning?
So we'll have a look at their overall situation, ask them, do they have any other liabilities, any credit cards, do they have a student debt?
Yeah.
And then those things obviously impact their borrowing capacity. So someone that may have been able to borrow $540 with no debts, that might have a $3,000 or $4,000 credit card.
Yeah.
That may reduce their borrowing capacity down to 500, 510, for example.
Really, it can be
it
quite
can have
a big
an
jump.
impact on that.
Yeah. And what about, I guess, outside of credit cards, and it's more on the monthly, let's say they earn $5,000 a month, for example,
yep.
But yet they're spending $4,900 a month. How does that look to banks? Because they're not obviously saving, right?
Absolutely, not a good look. So banks will look at 3 months statements, and they'll look at your expenses over that period of time. It's obviously a good idea to, when you're saving for a home, to be mindful of what you're spending your money on, because the banks will look at that and that can have an impact on the final amount you can borrow.
So is it like Netflix subscriptions, like gym memberships, or not?
Yeah, all of those things. They're the questions that we ask, and when we capture living expenses, they do ask those things. Like for recreation example, going out for dinner, like you said, gym memberships, cinema, all those sort of things that the customer has to declare in the application, so we can work out what they can actually borrow. The government has a guideline around this called HEMS, and that's the minimum expenditure amount they have for different examples. A single person with no dependents, they might have a minimum HEMS expense of $1,800 a month. A couple with 3 children on $200,000, they may have a HEMS minimum of $5,000 per month, for example. There are some other expenses that are looked at outside of the HEMS guideline, such as private health insurance, private school fees, income protection insurance, and other things that are paid out of your own pocket each month, on top of the normal living expenses.
How interesting. And I guess just diving into the grants a little bit more, are there any other, I guess, and specifically for Queensland, any other grants that you, I guess, more first homeowner grants that you wanted to mention or run through?
There's the first homeowners grant, which is if you buy a new property or buy land and build. However, that cuts out at $750,000.
Okay. So
up until the 1st of July this year, there's a $30,000 first homeowners grant for a new build or a new buy, decreasing from the 1st of July to $15,000.
Is that they have to buy a new home?
Buy land and build.
Or buy land and build.
Yeah.
Okay, gotcha.
Correct.
And what about on the established stuff? Let's say I just want to buy a house in Coomera.
You'd just be looking at the stamp duty exemption and also possibly the first home deposit scheme, the 5%. Been speaking about.
And is that capped, that this 5% scheme, do they only allow for X places per year within that scheme?
I think this year there was 35,000 places Australia-wide, but I've found over the last few years since the scheme was introduced that we haven't run out of places in that time. There are price caps with the scheme as well.
How do I get in contact with you? Let's say I'm a first home buyer, I want to engage with your services, I want to look at getting a loan, what's the go?
Yeah, you can email me at Jamie, Jamie, at Moneylinks, moneylinks.com.au, on my mobile 0437 59 5700.
Mate, too easy. Thanks for joining the Carpool Series.
Thank you.
Awesome, mate.